Hey guys, this is Simon with Trade and Perform Coaching doing I'm going to do a brief trade review from Friday's trade, and then I'm going to kind of go to a weekly overview and see if I can't help some of y'all get a handle on consistency and how to get through frustrating markets versus markets that are much easier. So first, in the morning, the concern was several things. First of all, obviously open drive higher. Secondly was, would we see any kind of rotation out of the gate, looking for the possibility of a corrective move, obviously, which we did not have, right? And then the other part is, obviously, we didn't want to stand in front of a freight train and get run over. So out of the gate, I was short NQ in the morning. I'm not going to go over that trade other than to say I called it real time. And that obviously worked out pretty nicely on the NQ trade. What I'm trying to do when the market gets like this is simply find my one or two spots where I can capture my trades, make sure that I've got a good rotation in when I enter, and then if the trade doesn't work out, keep my losses relatively tight, not keep coming in and out, in and out. Why? Because the slow, grindy market for smaller traders. Okay, so the biggest component in trading successfully in day trading is not your setup. Most setups can be found, right? But the pressure to make money just as an individual trader is high. That pressure increases when you call your trades in real time, and I even more so don't want to get caught in a situation where I'm fabricating trades in order to look good, and that's a risk that I run by having a market preview and by pointing out where I see my various exits and entries in the market. So to begin with, my first key, or the first thing I was looking for, was whether or not ES was going to be able to trade below Globex high. Obviously that never happened. It was right down here. It should be corrected, right? We never got below Globex high. We never traded even to half gap, really, and obviously gap fill was completely out of the question. I've moved this chart around quite a bit, but this was gap fill from Thursday's close. So we didn't have any of the qualifiers that would show us any weakness. Secondly, and importantly, right, that opened the potential to an open drive higher. We really didn't have an open drive higher. It was bizarre for a non-farm payrolls day to get this kind of trading activity. Is truly awful. I don't know what else to say about that. It's really, really, really slowed down. So the thing that I did extremely well was once I got the NQ trade, I waited patiently. I did not press to the short side at all. I waited till the first hour was completed, and once I got that first hour high, what I was looking for is a trap trade. In this particular case, the trap trade set up right here to the short side. It took forever and a year. As a matter of fact, it took so long that I finally just brought the stop down to a tick above. And if anything, this is a good lesson, right? My stop was originally a point behind here, and had I left it a point behind, I actually would have been able to. I was short at 1946 3/4. We obviously rotated down to about 1945, and I would have been able to squeak something out of it, but there was really just nothing there. We just went up and traded sideways for the day. This becomes very frustrating for day traders. It's frustrating for me, right? I ended up moving the stop to one tick above the high of the day. I got one ticked, stopped out. That cost me my 6 ticks. On the day, not so terrible. I did all right with my NQ trades. I had 2 NQ trades that were profitable, but it set me back a little bit on the spreadsheet, right? I want to point something out here. This is the place when markets get slow like this, where traders get weak and they start going, screw it, I'm just going to start taking the open up, right? Because I'm not making any money anywhere else, right? Or they try to trade very quickly. One minute they're saying, well, this is the short, this is the breakdown here, and then they get stopped out. And they go, this is the breakdown here, and they get stopped out. Or even though it's quite hard to imagine not making money long on Friday, if you entered still at these peaks and you used a relatively tight stop, meaning a point or less, you still managed to get tagged out. And I can't emphasize this enough in ES. I generally discourage the use of tight stops. After it took so long to get any kind of scale, even I succumbed to this, and I did exactly what happens to every other small trader, right? I got tagged out for 6 ticks, and what most traders will do to justify that is they'll say, hey, I need to keep my losses tight, right? And so they'll use 5, 1-point stops, right? And they'll just get tagged out all over the place, and their losses will rack up. I don't know if I said that as eloquently as I wanted to, but what happened to me here is exactly what happens to traders most of the time, right? Except the only difference being is they start off their trade with a 5-tick stop, and they end up just getting annihilated, right? The other thing that happens to traders is they lose their patience with letting the market come back to them, and then they start chasing here. And this may work for a little while, but there's a risk to it. So I want to shift real quick to a weekly chart, and then kind of break down and kind of see where we're at from a weekly perspective. So let's pull up a fresh chart really quick and see what's going on here. Or maybe we won't. Let's see. There we go. Come on, TradeStation. What's going on with you? There we go. Let's get this up. And let's go to just an hourly chart and get a bigger perspective. Okay. So the first thing that I notice really quickly is that we're getting just narrower and narrower ranges, and we're just grinding up. We started to expand the range a little bit here. Okay, and that's given us a few trading opportunities. And you can see that reflected, right? It wasn't exactly a terrible week, right? Even as difficult as it's been, I'm still on track. For the month, I'm sitting up 5.5 points. For the week, I was up 5.5 points, first week of the month. Not terrible. I would like to generally see that be double to triple that, but it's a hard environment, right? I can see since I've started this spreadsheet, which went back to the 1st of last month, I have racked up 25.75, 25.75 points, which is excellent, right? And you can see my win ratio, although the last couple of days have been a little difficult. You can see that we are still, that the losses have been, first of all, equal to or smaller than the gains for the most part, right? And that the wins have been much higher, the number of wins have been much higher than the losses. Okay, so all of that speaks to I'm just simply not getting a lot of opportunity. Otherwise, I think all of these numbers in the plus column would be much better. So the next thing is I want to know as a trader is this, what we're looking at here, is this normal or abnormal, right? Do I need to abandon ship and start chasing markets up because we are now in the straight up market environment, or do I need to stick with what it is that's brought me here? So let's go back and look a little bit further. The market has a tendency, if you'll look, to dance in between 2 points. Okay, it goes from very tiny narrow ranges. If you look here at the last time we went up, this is back in February, right? We had a very similar environment here with very small rotations. Everything was getting bought. Okay, and you see as we got towards the end of that, the range actually started to increase, but that this actually lasted an entire month long. And then if you'll look, as we rolled through, right, rolled into March, look how the two-sided market started to come in, right? It got extremely tight right there up top for about a week in the first week of March, and then boom, you can see, right, this chart is auto-adjusting. Look how nice the two-sided market came in, and I'm pretty confident, not positive, the market doesn't have to do anything, but I'm pretty confident we have a wave coming like this. And this type of market smokes chasers and rewards people who let the market come to them, and I'm very confident that when we get in here, I will see the P&L jump. And I'm sure, and I'm pretty confident this is right around the corner. Again, I don't set the rhythm. The market will. I'll just react to it, right? As you can see, we had this for a month and a half of solid market, right? So really, we've just been dealing with this for about since the last week of last month. We're in the first week. We're at 2 weeks. Last time, if I go back and look how long this lasted about where we had this steady drive until we really got into two-way markets. Was really from the 5th all the way until we really didn't see two-sided markets until about 2.5 weeks into this type of rotation, and then we started getting two-sided markets. So, and this was a pretty long bout. I suspect we're about to get the same thing, and that's great. I'm looking forward to it. I'm totally prepared. How do I prepare for the market to expand ranges? Well, first of all, right, I'm not going to continue to chase higher as the market grinds higher. If it gives me an entry and I can let my trailers work to the upside, that's great. I'm happy to let them run in that fashion. okay? Meaning I'll take my trailer, I'll take my scale, and then I'll let it go. However, I'm also going to look to see as we rotate higher if I can't get location for downside trades. What happens to traders in this environment, because obviously any shorts have been completely annihilated in this type of environment, right? Is very, for any institutional shorts, any professional shorts, these guys are just bone crushed, okay? So the first thing is, I don't want to press my shorts too hard. When I get profits, I want to take them off the table. The other thing that I notice is that as we come in for dips down lower, I will be looking for responsive buyers to push back up, right? So I already have it in my mind not to get too bearish. So my coaching cue on this would be this. Okay, first of all, don't get bearish just because the market's grinding up. It does not mean we're going to roll over. Markets rarely roll over from the top and go into a bear market. They generally pull down and find responsive buyers back up. So keep looking for buying opportunities, but wait for the market to roll down for you so you can get a what I would consider a less risk, a reduced risk entry, right? I don't like using the word safe in trading because there is really no safe, right? Then the last piece is if you demand that the market constantly pay you for your trading style, right? In every environment, you're asking to get set up because that means that first of all, you're demanding perfection from yourself to be able to read every type of environment. And secondly, you're demanding that the market owes you something, and it doesn't. Okay, the market owes none of us anything, right? So I'll continue to approach the market. I'll test where I can, right? I'll manage my downside. I know that my trades will come to me, and I'll be a little more patient with my entries than I normally am, and I'll let the market prove to me when the two sides come in. I'll know when the two sides come in. I measure the rotations every single day. Until then, I'm going to continue to bide my time. I'm going to continue to let my P&L stack up, even if it's only at one trade a day and that's all I can find. I will control my downside, right, while allowing my P&L to go up. Again, all these trades that you're seeing here were either spoken about or called in the market preview, or I actually tweeted them out in real time on StockTwits and Twitter, okay, prior to entering the trade. And I think there's a dramatic difference in that. So versus what most people do. The other thing is most people would like their short-term memory. They rely on people having short-term memory and would like their calls to go away. I do not do that. I'm happy to stand behind my work because what I'm trying to show more than anything else in my trading is, number one, consistency is possible in day trading. Number two, you can make money in day trading. It is completely possible. And number three, there is no magic to it, right? It's just sticking to a plan and addressing the emotional issues that you have revolving around trading, most of which are fear and control issues. And those can be eliminated if you build a structure and a system around it. I've done so successfully with almost every guy that I've coached. If you'd like some help or some guidance and kind of see how I break it down every day in the room, and you have not already requested a trial period, you're welcome to send me an email at tradeandperform, TRADENPERFORM at gmail.com. Give me your Twitter name, and I will send you an email with my private Twitter handle. And as soon as you request a follow, I'll be happy to give you a 7-day trial. Look, making money in this market is possible as long as you approach it as a business and not as a point of entertainment, and not as if the market owes you anything. I've turned a lot of frustrated traders into consistent, profitable traders, and it makes a world of difference. Even a difficult market like this, where you can pull money out, makes life so much easier. Anyways, I hope this helps some people. I think that the value that I'm offering at $95 each month, it's less than 2 ES points. It can make a world of difference to most traders. And there's not a lot of hype there. I try to do my best I can to back up everything that I say. So anyways, I hope everyone has a great day. My name is Simon. I'm looking forward to the week that's coming on. And hopefully we will get a little bit of expansion of range and more opportunities. If we don't, I will stick to my trade plan, and I hopefully will stack on a few more points onto the pile and keep moving forward. So anyways, have a great day, guys. I hope this helps someone. We'll talk to you soon. See everyone in the trading room at 7:45 tomorrow morning.